German investor morale falls in July. Welcome to Market Insight. I'm Ramzan Karamali. According to the ZEW, the Economic Sentiment Index dropped for the first time in a year to 41.8 points. That was below expectations. The data highlights that the recovery in the Eurozone's largest economy will be a bumpy one. In contrast, though, the assessment of the economic situation in Germany improved slightly, with the indicator rising to minus 68.9 from minus 73.8 in the previous month. So what does this all say about the state of the German economy? Well, to help answer that and more, I'm joined by Vicky Pryce, Chief Economic Advisor at the CEBR. Vicky, thanks so much for joining us. So what does today's data tell us? Does it reinforce the notion that the recovery in Germany will be a pretty weak one?
Well, yes, it's going to be a pretty bumpy ride, I think. The forecasts now are for growth of 0.3% for Germany this year. Well, it remains to be seen whether that is going to be achieved or not. What we also saw, not just the investor confidence slipping, but also we've seen industrial production come down. Data came out yesterday, which suggests that certainly for May, we saw a drop both in Eurozone industrial production and, of course, in German one as well, and in France. So there have been declines in other countries too. I think Italy and Spain saw some declines. They hadn't been so big as in Germany and France. But nevertheless, what it does suggest is that the German economy is still looking pretty shaky. It needs to have a boost from somewhere. And the real question is from where? And for the moment, if investor confidence remains as weak as it is, then I can't see where it's going to come from unless the consumer wakes up and starts spending a lot more.
So what does this mean for policymakers at the ECB? They meet on Thursday, but markets seem pretty certain there'll not be another rate cut. What about yourself?
I have to admit that this has been the sort of general expectation. We got the first cut. The other major banks have not done anything. So normally you would have expected that there would have been some coordination in terms of rates coming down. So the US is unlikely to do anything before September, even though data there is a bit softer now. And of course, whatever happens in the UK on August the 1st is still going to be a little bit ahead of the meeting of the ECB, which is, of course, this Wednesday. So if that is going to be what the pattern is going to be, which is we've done the first move, reduced it by 0.25%, nobody else has done anything else, let's just wait and see. Then we're not going to see a cut, I'm afraid, this time around. But inflation is actually behaving. If you look across Europe, there are differences, of course, but in some places, not just the Eurozone, of course, if you look further afield, I mean, we have some countries with deflation still, such as Bulgaria. Well, what it all means is that this gets translated into what happens in the Eurozone itself. And of course, there are variations, but we have seen generally the trend improving downwards, even in the big countries, with the odd exception. So my expectation is that mainly because of political reasons of the sort that I described before, wanting to be more coordinated and not wanting perhaps to see a big drop in the euro exchange rate, what we may find is that there is a delay and it will be next time rather than happening this week.
Well, you mentioned their inflation and you talked about the UK as well. On Wednesday, we get inflation data out of the UK. What are you expecting there?
It's very interesting what's going on in the UK because, of course, we still have service inflation being very high. The expectation is that inflation may come down a little bit. I mean, remember the data we're talking about is over 5%, so 5.7% last time. Could be a little bit less this time, but it's still considerably higher than what the Bank of England would like to see. They've also done a survey themselves, which they do quite regularly, which showed that businesses are still intending to raise wages ahead. So that's going to, of course, filter through to what we pay at the end as consumers. Also, of course, we've had the minimum wage going up, which is putting extra pressure on businesses. So there is this underlying inflationary trend there, which is going to be with us, I think, for a little bit longer. But overall, nevertheless, the general forecasts have been that we'll probably be on target again with the latest inflation data, or even slightly below that. On that basis, you would certainly expect, under normal circumstances, to have interest rates coming down. And I think they will. I think we waited long enough.
But Vicky, could there be a flea in the ointment? On Thursday, we get the latest jobs data, and you did mention their wage growth is still something the Bank of England is worried about. So could that maybe stop a rate cut in August, as well as the sort of uncertainty around other central banks and their motives?
I don't think it would. It wouldn't act as such a deterrent, if you like, for cutting interest rates, which, as I said, have to be cut because of the way the economy is operating right now, because there will be serious problems ahead. But what has happened at the same time is, of course, first of all, to remember that unemployment is a lagging indicator. It's been going up. And the second thing is that if you look at recruitment intentions by firms, they are slowing down quite significantly. We've already, of course, had some big announcements of cuts that may be happening in various areas in industry. So I think that is a worry looking ahead. And if that is indeed the case, then perhaps some of the pressure on wages is going to be going down. And I think the Bank of England will be looking at what is being told by its agents in terms of what's happening regionally. And I seriously do think that, yes, of course, one will have to watch what's happening on the wage front. The wage push inflation is something we don't want to see persevering, but overall the trend will still be downwards in terms of what the inflation impact is likely to be.
Interesting stuff, Vicky Pryce there from the CEBR. Many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.